Welcome. I want to apologize to you guys. I'm late. My camera was giving me technical difficulties. Believe it or not, I had some technical difficulties today, but I'm here for you. Ready. You guys who waited, thank you. Godric here, your stock market mentor. Monday night, December 2nd, 2024. I'm going to talk about some stock market stocks tonight. Thank you for joining, you guys. Appreciate you. Mad Licorice, welcome. Welcome back. Jay, welcome. Maria, user 223. Retro Gaming, welcome. I had some technical difficulties. My camera was flipping around, but got it to work. Starting today, we had a big move on SMCI today, plus 936 to 42. And check it out, after hours, up another 165, so it's taken off. So the news today on SMCI, well, first of all, the stock got beaten to hell. It went all the way to 120, came down from 120 all the way down to 18 on problems it was having with the accounting, with the reporting earnings. They were threatening to be delisted from the NASDAQ, and they got a new auditor. They submitted their report, and apparently they're good. Apparently they're out of the woods, at least so far, for now. Maybe someone did them dirty. Maybe somebody was pushing the propaganda. And bad news causes the stock to come down. And then they do an investigation, find out that everything's okay. So it might be that, and the stock's going to come back up now, which is how the news looks. So here's a stock, guys, that got beaten to hell from bad news, but maybe the news was not right. And now it's climbing back up, and maybe it'll go back up to 120. So you have a stock here that could potentially go, let's say, back to 120 within, say, a year or two. So let's say it can triple, right? SMCI, super microcomputer. Write it down in your journal. You don't have this stock, write it down. Consider there's definitely some upside to this stock. I got the 3-month chart here. Volume 258 million, which is record volume for this stock. Is showing a PE. Apparently the PE is okay. PE 20, which is very fairly for a stock like this. Now, I talk about how to do the cover call, right? Because why? Get a bunch of shares, at least 100. Write a cover call, which means you agree to sell it 1 month out for a little bit higher. You give away the upside. You sell it to those option buyers. You bring in money off your shares every month. 3%, 4%, 5% a month. In the case of SMCI, even more. Let's take a look. I'm going to pull up the... By the way, you guys don't have a stock market account, open your account at Schwab. They have good tools. They have a Thinkorswim app. And they have your option chain, which is right here. This is the option chain for SMCI for 1 month out. This option chain is January 3rd, I believe. Now look at these call options on the left side. Left side calls, the right side puts. For tonight, we're just doing the calls. You would not believe these call options. For you guys who don't know, an option is like how you control a stock with less money, but more risk reward. So these call options are all for sale. Let's say the 42. I'm showing $5.95. Let's say $6 actually on the bid, which means $600. So you buy a call option for $600, right? 1 month out, instead of paying $4,200 for buying 100 shares. Now that's not the one I'm going to show you though. I should have circled. The one I'm going to show you is, in this case, the 46. The 46 here down here by my ear. That's the one you want to write for your cover call. So you buy the shares here at 42. In the case, if it was today, and that's 4,200 for 100 shares. You write the cover call for the, I'm going to say the 46 for next month, January 3rd. That's about 30 days. Thank you guys for the likes. Let's get these likes up to 1,000, guys. Pat like a video game. And it's showing 375 by 455. Now that's a wide bid ask. I'm going to say that's happening only because the market's closed. If you look higher at 45, it's 470 by 485. It's more tight. And the 44 is 5 by 560. But down here in the 46, it's 375 by 455. And you know how to do the math on that? What it means is we're going to get paid $375 for every 100 shares of SMCI we have on the cover call for every month. Now, because the spread is wide, I want to instruct you guys to put a limit order because you'll get more money. Bring in my calculator. Okay, so I would put a limit here at $4, okay? Because high volume, you'll probably get it. Someone will probably buy that option from you. And it's showing 375 by 455. You probably even get 410 or 420. Hey, Kenneth, welcome. Kenneth, you're subbing. You want to come up? Just click request and answer your questions. You guys who want to sub, it's only $5 a month. I answer all the subs questions first. Let them come up on my live. Okay, so let's do the math, guys. We do cover calls, right? $4. Put a limit order to sell one call. Strike 46, January 3rd. $4 divided by the share price of 42, which is what it closed at. 9.5% return on the cover call. Write that down. SMCI, 9.5% return on CC. This is good for a new investor that hasn't done cover calls. You get a big bang for your buck. Because why? Because the stock is hype, because they have bad news. Now they have good news. The stock's heading back up. Probably tomorrow it'll be up, and probably this week it'll probably be higher. Maybe, I don't want to guess, but let's just say it's in an uptrend right now, right? And eventually it will sell down. Obviously, they go up and down, but right now the uptrend is very strong. Volume is very strong, so probably the stock will be going up. And on the cover call, you're getting 9.5% return. Now, if this high cover call return continues, it's going to look like 95% return for the year. Because why? Because I teach to write 10 cover calls a year, ideally. You could do maybe 12, but 10 is easily, you can mess up 2 and still do 10. And that's why it's very doable. 95% return based on that. You don't see that a lot, guys. Write that down. SMCI stocks going up. Cover calls very, very, very profitable. Any questions? Thanks for the like. Let's get this likes to 1,000. Almost there, guys. Pat. Appreciate you. Thanks for coming tonight. What do you recommend for SMCI for selling cash secured puts? Question, Kyle Chung. What do you recommend for SMCI for selling cash secured puts? Okay, so selling puts is basically a similar situation to selling calls. They're both long positions. You want the stock to go up, ideally. Either maintain or go up, not down. when people hear puts, um, they often think stock going down. But in this case, we're selling a put, which is what the question. So we want the stock, and technically stock, to go up. It's a long position. So here, look on the right side. Well, it only shows a 40. Let me pull up my account here. I have it on the computer. I can't show it to you from here, but I'll tell you what the option says. Like, for example, you can sell this put here on the 40 for SMCI, because I think the stock's going up. It's already 43.50 in after hours, if you look on the very top there. So you can sell, let's say, a 40 put for between 460 to 490. Let's say 460, which is the bid, okay, on the put side. And that means you agree to take those shares should they drop below 40 by next month, or at the end of next month. I'm sorry, at the end of next 30-day expiration, which is January 3rd. By January 3rd, if it drops below 43, if it drops below 40, and you wrote the 40 put, you sold 140 put, you'll get 460, which is $460. So on the cover call, we're getting $375 a month on that sweet spot. If we sell the put right below the share price, we're getting 460. Let's do the math on that. 460 divided by the share price of 42. Actually, no, because we're going to take the shares at 40. So 460 divided by 40 equals 11.5% return. 11.5% return. So what I recommend on the put, so the put pays it even more in this case, because we can sell a higher put. Let me pull up the SMCI on my computer. Let me just see. Because when you write a lower strike, you want to have a buffer. That's why you don't want to just write any strike. I'm telling you the best strike to write. So when you go to options, click all, expiration all, put some calls. I'm going to go to January 3rd, which is 31 days. Okay, I'm confirming the put is 460 on the 40. The 39 put is 415. Okay, and that was a fine put to write too. But I would write the 40 and get 460, so getting $460. And they're going to hold for that. They're going to hold 4,000. Okay, because they're going to hold you have cash accrued put, so you have to buy the shares at 40, which they're going to hold 4,000. 40 times 100 for 100 shares. That's answering your question. And you're going to get 11.5% return. Another way you can look at it, an investment of $4K makes $460 for the month. And on the cover call, an investment of $4,200. I'm sorry, I meant $4K. $4,200 gets you writing the 46 cover call gets you $375 a month. And that's the essence of a cover call, how it works, how it looks. Another thing about Schwab is if you get Schwab, you'll have access to a real broker, a real person, not like Robinhood. So they can walk you through the trade, they can answer your questions, they can show you what button to push if you don't know. Or you can just, connect with Godric, and he can also walk you through the trade. I've done that before. You guys that don't know, show you what button to push. You start by subbing, only $5 a month. Questions? More trades that can go wrong, and premiums are better for monthly than weekly. Yes. Thank you, Abhinav. Abhinav, you already know Abhinav. If you want to come up, can you request? Oh, wait, hang on. I might have your request here. Let's see, Abhinav wants to come up. Abhinav.
There it is.
Where?
Wait, hang on. Let me get my camera on.
I can barely hear you. Hang on. And was I coming? Was I coming in low on the volume right now?
No, you're coming in good.
All right, thanks. How you doing, Abhinav?
I'm good. I'm awake.
Is it late for you?
It's good. It's a good time for me. I usually go to sleep, but I wanted to join today.
Uh, I'm going to introduce Abhinav here. He's taking my course, How to Retire in the Stock Market. Um,
Yes.
tell us how you're doing so far,
Thank you.
and what do you think?
Yeah, so I wanted to just come on here and just kind of express my gratitude and share some of my experience with anybody else that's been watching. Um, Also, you can see that I've been getting mentored by Godric, who posted. He had posted a video, I think, yesterday of one of our sessions, which in that session I had my mind blown. And the next day I went ahead and executed several of the trades that we had discussed, pocketing just like I don't even know, the initial investment that I had with you is just thousandfold return at this point already, not just in dollars, but also in like learning the strategy, which I've really enjoyed working with you in this period of time, and just in a short time I've picked up, I feel like, a lifelong skill that could have taken me years to figure out on my own. Selling covered calls and protecting your account, protecting your money rather, right, from risk, which I've been doing decent by myself, but now I have a strategy that I feel like I can execute, and we've made it really easy. So it's been a good mindset shift for me in just a short period of time, because we haven't been working that long, but it's been really great for me. So I really recommend this mentorship program that you have, because like you were saying earlier, you were showing the SMCI trade. When we started talking, I told you about how I got out of it when it dropped so much, and I was like, man, this stock is done. But then I got back in it because the covered call is so lucrative. And now you were doing the puts example, and I'm going like, I would hold it at 40. I'd put $4,000 if I can get 465 out of it for the monthly. You know, some of the chat was asking the question. So I think just wagering trades, I'm just much better now at analyzing the positions. Before I was doing equity trading or buying like open-ended calls and puts. But the game has been like really shifted for me in this short period of time. So that's been my experience. It's been really positive, and I'm just looking forward to working with you. And it's been a big mindset shift for me. So I highly recommend it to whoever's here.
Thank you. You make it sound so good. Tell us like one of your trades that blew your mind, maybe
Yeah,
more specifics, and like what kind of money you can get.
perfect. Yeah. So the one mistake I made, which we talked about, was a great lesson for me, ended up being a blessing, because I had bought 100 shares of Tesla, and immediately that day Tesla dropped like 10 points. I was down like $1,000, and I was like, I put in a covered call order, but I didn't hit execute on the market because I was expecting the stock to go up, because I thought it was one of those Tesla days where it was going to go up. Well, nothing happened. Then the next day, something similar happened where I, for some reason, couldn't execute another covered call. So now I've lost 2 days. I'm down on Tesla. I've not made any money. And this is when we had spoken on that meeting, which I'm telling you guys about. You should definitely go listen to that meeting, because you can see real time my mind getting blown. We looked at what's called a leap, selling a leap, right? Instead of these monthlies, which are great for monthly income. But if you're holding 100 shares of Tesla, I learned that you can sell this leap option expiring, say, in 2026, 411 days out or so, and or even further out, 2027, 775 days out. And you can collect on like a $33,000 investment at the time, which is what I bought Tesla at. You can collect $6,500, $7,500, depending on where you set your strike price. If it's in the sweet spot, sometimes $7,500 for the 2026, or $10,000, sometimes $11,000 for the 777 days out. And then you can just use that money to then go buy other stuff, which I did. I did exactly that. So immediately I was at a negative 1,000. But now I've just collected $7,500 on Tesla. I go on that and I go buy Rocket Lab. I buy more IONQ, and I buy some more SMCI, which I got out of earlier because I took a loss on it. And I covered calls on all three of those, and I made another almost $1,000 on the monthlies. from the Tesla that I sold the leap on. So I basically took my money, my original investment, and I learned how to get some money out right away, a good sizable amount of it, and then I used that money to make more money. Just a matter of like a couple of trades, and this was just like next level. Yeah, like I was not trading like this before. Let's just put it that way. So that's a real trade, and in a short period of time, I mean, like I'll be honest, I paid you only like $500 for mentorship, which is such a good value to get access to you. Like my biggest thing is like I've been able to trust you very quickly. You're reliable. I ask you questions. You have great, thoughtful answers. You make sure that I understand it. And I mean, that's what I needed. It's like I really needed that guidance because that's what was going to take me to the next level of my trading. You know, I've gotten so far by myself, but like need that next like step, and that's what this has been for me. And these trades have been the next level trades. I don't have to sit there and watch the chart all day. That was me every day, like watching. Oh shit, it's going up. Oh, it's gonna come down. Let me get some in, do some kind of like quick swing trading or whatever. But now I don't really have to do it like that. I can still make great money.
You make it sound good the way you say it that way. Appreciate that.
Well, it's the truth. I mean, I would tell you that's been my truthful experience.
I'm glad you got a lot from it. And I was talking about doing the long-term cover call on Tesla and getting like $6,000, $7,000. If you guys know, a lot of getting rich is knowing how finances work. And you guys may have heard of borrowing money from life insurance. If you have a life insurance policy, you may have heard people borrowing money from a life insurance policy, putting that into a business investment or putting that to work. And similar in cover calls, you can borrow money from your own shares, but you don't really have to pay it back, do you?
No, I mean
It'll expire after the expiration date, and then you can just do it again, whether it's monthly, yearly.
yeah. I think the one thing I want to also add is that for someone like me who does like the exercise of trading, you know, I know there's people out here who don't want to maybe trade so much, but they still want to make money. I used to like the exercise of watching the charts and like trading or whatever, and it was cool when you would win. Of course, it sucks when you lose, but that's part of the game. But in this, what I've learned is there's a repeatable way to do it, and you know it's not that difficult, but I can see that the temptation is you got to be patient. You know, you got to think through your strategy here, do the math on. Like for me, it's like make sure I'm in the sweet spot for the strike price, which is something I'm still figuring out to get perfect. And if you do that, then you made a great trade. And why do you got to do more trades? You know, like just to do more trades. So that's been a big shift for me. And I think for some of us out here that are maybe doing like what I was doing before is like trying to buy calls and puts, just hoping your money go, you know, double, triple, quadruple, or whatever. It's like, why not take something that just is kind of predictable and somewhat certain and just repeat that? But that's the hard part. It's like you don't think that way. You're like, well, I know that this little thing works. Can I do it? And that's what I hope to see myself too. Like, I got to be able to stick to it month after month and like keep this going. And that's what I'm excited for.
Wonderful. Appreciate that. I'm glad you're getting a lot out of it. So, as far as mentoring one-on-one, I just charge $50 for a one-on-one session for an hour, and we record that session, and you get a recording. What I do, I figure out where you are, answer all your questions, show you some of these trades, and I try to get you from level 2 to level 3, for example, that's where you are. If you're level 3, I'll try to get you to level 4. And then, furthermore, my whole session is just $500. That's a one-time. And that covers 12 sessions on a one-on-one Zoom app. And that's A to Z on how to retire in the stock market. I give you all my principles and all my golden nuggets. And we generally meet, you know, once a week. And you do the trades, you apply the trades in between. And that's my mentoring program. Thank you for edifying that. Appreciate that.
Yep. Thank you for having me. I think I should let you continue live. I'm sure you got more stocks unless you want to ask me anything else.
And the minimum is just a sub to $5 a month. That'll keep you
Yeah,
on my list, and you guys know that I communicate with all my subs.
it sure does. I could attest to that. I love having access to you to be able to ask you my questions. I mean, just today, I mean, this is maybe more than the sub, but in real moment, like I called you this morning because I was having a tough time making a decision on these dividend stocks, which I've been studying. And
Oh, tell us what dividend stocks you like right now for the audience.
yeah, so I really like
Maybe give
today.
us like three or four,
Yeah, so I
and
think it's
explain why they're good.
why they're good. Yeah, so I liked what I bought today was Altria. I think it's MO is the ticker,
Yeah.
and
Emma.
and and the reason I bought that is because I was looking at another dividend stock, which is Philip Morris. It has a really good share price around the $130 range. I think gives you a little bit over 4% on the dividend. And there's a really good stock. It's been on the uptrend. The 5-year chart looks good, and it has a great dividend. And you know, it's got steady growth in the stock as well. So that was my choice. But I've been also looking at Walmart. I've been looking at Coke versus Pepsi because I've been in Coke before, and I recently learned that Pepsi is actually a little bit better. The stock price is higher, but also their growth has been better, and the dividend is slightly more. And so I was contemplating between, you know, which of these am I going to go into. So anyway, I went into Altria. I went into um, it says the live is paused, so I'm not sure if people can still hear me.
Oh, is it?
Oh,
Is
there
it?
you are. You're back. Okay, so
PM is 131 a share, and it's 4% dividend yield. And MO is let me pull it up. You bought MO, right?
yeah, I bought MO. I think it was like $53.
MO it's showing 57 right now,
Oh,
57.18, and the dividend of 7.4%, which is really high, right?
and that's why I bought it, to be honest, because I know that the share growth might not be there, but for the type of account I have, where I have, you know, a lot of high beta stocks, I wanted to get into something that was low beta to help me with the drawdowns, which might come anytime, right? And that's why I went with that for now. But again, I am going to add more. I plan to add like Pepsi is on my list.
Pepsi is 163 today, and the dividend is 3.32%. Now,
Yeah,
do you remember my training about why dividend stocks are good, or
yeah. So the benefit is right, like especially we were just talking about beta for a minute here, but that's a factor. Like for me, when I hold things like Tesla and Nvidia and IONQ or SMCI, these are all high beta stocks, and when the market corrects, these are going to have pretty significant pullbacks. Draw, you know, maybe it could be 10, 20, 30. In SMCI's case, it was very significant, and that wasn't really you know, the whole market, but that was kind of a situation where we can get into. And for that reason, these dividend stocks, they still give you that percentage yield. That doesn't tend to change, especially for the companies that we just talked about. One thing we looked at is the history of the dividend has been either consistent or gone up versus, you know, something that because it drops in share price, they give you less dividend. That's not the case with these companies that we talked about. And that's another reason we wanted it in there is because it helps you take a portion of your account so that doesn't get wiped down just as hard as your other stocks did. Plus, you're also still collecting your dividends, so you still got some income coming in every quarter.
yeah, it's less of a drawdown, which means it's a little bit more safe. These dividend stocks, and you get the dividend, which is the income, and that PEP I mentioned was 3.32% yield. Now, we also talked about in the session we had. We also talked about a hedge buying the put.
Yeah,
You
that's
want to
I did
explain
that
that
today.
to
Yeah. So the other
the
thing,
live to see if you can.
yeah, this was really helpful for me because, as I mentioned, I do have a high risk account for the most part. With you know, it's aggressive in the covered calls, it's aggressive in the high beta stocks, and I am working towards building positions in dividends. But the only other way I could have hedged my account so that if there is a drawdown, if there is a correction, is to go and get some puts on the market, which broadly speaking, we looked at the S&P, we looked at the NASDAQ, and those are some, good indicators of the market. If it corrects, those are going to come down. So thinking like if you're looking at 30% pullback, I worked with you to look at leaps on the SPY and 2026 January, so 400 plus days out, getting into those, buying those puts. So again, this is not covered or naked puts. This is just like actually buying the puts, and you want to get the goal is ideally to get up to 5% of your account. It's like a fire insurance, kind of like this kind of insurance on your account. That if things start to come down, this is going to go up in value. So it's a hedge. It's a put that's hedging against your other positions, your other long positions, and so that's another thing I did. I didn't get my entire 5%, but I started going towards it because the kind of light bulb moment I had was if the market is up right now, which it is, it's making all-time highs. Everything's kind of up, except for a few stocks here and there. But it's a good time to buy that put because it's relatively cheap in comparison to when the market's already in a peaking or trying to correct itself. I'm expecting the Santa Claus rally to continue. I want to buy more of that, and along with the dividend stocks to try to really balance out my account. So that was really cool too. Those are two practical things, brand new things for me. Hedging, because in my previous strategy, I would just have to basically sit and wait until recovery, until the momentum comes back. Otherwise, I'm just sitting there.
Yeah, if you bought a put hedge, if you bought a put a year out, and do you remember what strike you bought on the SPY?
I did, I think 420.
Like 420. Okay, so out of the money.
Yeah.
So the value of that is if you can have a small percentage of your account on put, and the market corrects.
Yeah.
Say the market corrects 30%, right? That put can have it so where your 30% correction is really only like 20%. So it's not going to cover everything, but it can make a big difference. And that is like night and day. If you're managing a lot of money, being down 30% is a whole lot worse than being down 20%, for example. So you have to let the math work for you. You can always add more puts if you want to do that, but this is just a basic philosophy on being able to trade both sides of the market.
I have a question for you, actually, real time. In this case, let's say you had 5% or some percentage up to 5% in your account puts, right? And you should always have some cash on the side, some dry powder, right? If there is an opportunity to buy. But in this case, if we see the market come down, would it be a good idea to actually add and double down on those puts if you see them?
Yes and no, because you don't know how much is coming down. So we don't have foresight for the most part. We have hindsight.
Mm-hmm.
In a general sense, if you have 5%, you're okay. You can leave it like that. When you start adding is when the market comes down.
Yeah.
5%, 10%. It keeps going down. 15, 20. Keeps going down, and this is now a downward trend. Now, at this point, you can add a few more puts. Not just at the moment first day it goes down. If it's down, for example, 3 days in a row.
Yeah.
Remember that was down 1,000 points in one day, and it was down 3 days in a row. That's when you start adding. You start adding because now it's going to be more severe.
Mm-hmm.
You have to wait for that downward trend, 1, 2, 3, maybe over the course of a week or a few weeks. When you see a trend form, that's when you add, not just from the first sight of a crash. Because they'll say, "Oh, we're crashing," and then we'll come right back up and hit all-time high. So once we break away from the all-time high, which is 45,000 on the Dow right now, once we go down to 40, 38, 36, 35, and then we start going into a bear trend, then you can add. If you're trading, you can add more puts. Not too many, but add more puts. You can probably benefit from the downward trend. Now we mentioned MO dividend, which is 7%, PM dividend, which is 4%, and PEP, Pepsi, which is 3.32%. Let me add two more dividend stocks to that. You guys want to write this down? Starbucks, SBUX, is $101 a share with a 2.38 dividend. And also McDonald's, which I like. McDonald's is $2.92 Now they had an E. coli breakout recently, but the stock is still resilient, and the dividend from McDonald's is 2.39%. And Abhinav mentioned low beta meaning that they're less volatile. And in the correction, these dividend stocks are going to be a little bit more resilient to selling pressure. Whereas these tech stocks, like SMCI and other stocks, will probably get hit hard 20, 30, 40%, maybe some 50%.
Yeah.
Okay, well, that's a lot. Sorry for keeping you up late. I know you have
It's all good. This
work
was
tomorrow.
fun. I appreciate it. Hopefully
Let me
folks found it
see.
helpful.
See if you can. Let me see. Let me see if I can drop you. Can I do that?
Yeah,
Thank you for coming up, sir.
my pleasure. Thank you. Yeah,
Thank you for coming up, sir.
my pleasure. Thank you.
I subs and people taking my course, and he had a lot to tell. So we talked about dividend stock. We talked about SMCI on the put and the call. Let me talk about this SMCI trade for people who don't know, okay? And I'm going to finish this up. Somebody asked about the put. So if you're selling the put, you're agreeing to sell those shares, in this case, if the stock dips. It's kind of like, I'm sorry, you're agreeing to buy those shares if the stock dips. In this case, it's kind of like going into the supermarket and seeing some wine that you like. So we like SMCI, we like the stock. And going to the manager and saying, manager, if that wine goes on sale, I want to buy it. And how much would you pay me for doing that, for agreeing to do that? That's what a naked put or cash covered put is. You're agreeing to sell the shares. In this case, in my strategy, if the stock dips, stock here I'm showing 42 at the close today. Just ignore the after hours because we don't know what's going to happen until tomorrow. But stocks dips to 40, it's showing they're going to pay you $460, which means $460. And this is only a 1 month option. And that equals, we divide the 460 divided by the share price of 40, which is what you'll buy the shares at. Stock dips 2 points, 11.5% return. Now, the downside to the naked put is if the shares just go higher, 42, 43, that's fine because you get your return, you get your 460, and just walk away. You can do it again next month. But when the shares go to 40 and go below, then you take the shares, and you could potentially have a loss because if you're getting 460 premium, which is 460 per share, then what that means is if you buy the shares at 40, you have a bonus of 460. You have the shares at 40 with a 460 in your pocket. Okay, so the shares continue to go down. In this case, we're going to subtract 460, so that's going to be 35.40. If they go down to 35.40, what's happened is you've gained 460 in premium, but you lost 460 in share growth. So you're actually at a wash. So on the downside, if you want to look at what you can lose on the naked put or the cash secured put, if you write the put at 40 and the stock goes at 35.40, you've broken even because you gained 460 premium, you lost 460 on your share growth. 40 minus 460, yeah, 35.40. Now below 35.40, you start losing on the whole because now you've lost your premium and at 35.40, and below that, then now you're in the red. So if the stock's going to go down to 30, for example, buying the shares at 40, that's a 10-point loss on the shares, but you want to count your premium of 460. So the stock's go all the way down to 30, which is down 10 points. You lost $1,000 and then add your premium, 1,000 plus minus 460. So you actually lost only 540. The shares really go down $1,000. So it's of course better to write the put than not writing the put. And people use it for income. And if you ever get to a situation where the shares go way down, there's a couple things you can do. One, you can write the cover call. So let's go back to this side, right? And we're getting about 10% a month right now, 9%, 10% a month. So you have to count like how many months it would take to climb out of that hole. If you're down 540, the stock goes all the way down to 30. You're down 540. Well, one more cover call naked put, whether you're getting $300, $400, in 2 months we'll be back in the green, right? So it's just a matter of time. It's just a matter of how many calls you can write, how many puts you can write to get in the profit mode, and ideally to stay there. And what I teach also in my course is a cash cow position. And write that down, cash cow. And that happens when you write enough cover calls or puts to pay for your whole investment. In this case, if we're doing SMCI, we're getting about 9%, 10%, 9% on the calls, 11% on the puts. Okay, let's just say it's 10%, right? So after 10 months or after 10 calls, we've paid for 100% of our investment because we're getting 10% per month. And that means that our initial investment's paid for, we got that money back, and we can still write more cover calls. And what that means is the stock can go to zero and we're still making money. We don't really lose on paper because we got all those premiums that have already paid for our shares. And so I call it the cash cow. You get to the point where you can't really lose. It's a very powerful position. You can do that in a stock like SMCI because it pays so well. But also you can do it in a stock like Tesla. Tesla's paying about 5% a month. So that would take about 20 months or 20 calls. So 2 years, okay? About 2 years. So let's write that down, look into that. I'll talk about that more. Appreciate you guys. Hope I answered your question on your put, and thank you, Abhinav. Questions? Puts now are silly. Too much upside too soon. Zake. Zake, maybe puts aren't your thing. It's not everybody. You know what? People have different trades they like. I like to do cover calls. Think about the puts. There's no share growth on puts. On the cover calls, I can get share growth on the stock plus my cover call premium. So in a way, it's better than the put. However, the put, there's no share growth loss either. There's no share growth loss above your strike price. So you have to take both sides. Questions? We talked about 4 dividend stocks. We talked about puts and calls on SMCI. Talked about SMCI probably going to be going up. Take a look at the stock. Thank you guys for the likes. I appreciate it. Oh, thank you for the likes. I got 1,000 likes. By the way, you guys want to give 2 shares each. Share twice. Get some people in here. Help this algorithm. I can see the viewers. Tamara, you're subbing. Would you like to come up? Ask any questions? I'm going to put an invite in case you want to come up. You guys put some questions in here for Godric.
Hi, I am so new, so I don't even know what to do. I'm just listening. I'm just
Thanks for coming
listening
up, Tamara.
and
It's all
just trying
good.
to. Hi.
It's all good. Thanks for coming up. I would say like you've been watching my live. You're looking at us doing dividend stocks. You get the concept. The dividend stock is going to pay a dividend.
Yes.
Cover call is I get 100 shares and you sell one call, and I'm showing you the call to sell. The 46 for next month, and then on the put it's a 40, and then that will give you the income, 9% return, 11% return. You get the concept.
I get the concept. So right now I bought. Let me see what I have here. I bought 100 shares of IONQ.
IONQ, okay.
Yeah, and I did a call. I did a cover call on that this week.
What did you get for the cover call? Do you remember?
Let's see what I did it under.
When you write the call, you ideally you should have got around I don't know, 8% or 10%, or $400 or $300 or even $200. So the IONQ was around 3 grand for 100 shares, and I was paying around either $200 or $300 a month. So she's probably checking her account right now. But IONQ was down today. Matter of fact, let me see if I can. Let's see. That's Starbucks. Oh, by the way, Starbucks guys, if you want to do trading, wait. If you look at Starbucks, it moves like 3 points down. If you look at these, this is a 3-month chart, okay, on Starbucks. It moves down 3 points, up 3 points, down 3 points, up 3 points, and that's trading. Hey, welcome back.
Okay, so it looks like I bought a 36, and I was too afraid to do a 4 week, so I was like, no, I'm doing 2 week. I did a 36 at 2 weeks, and it gave me $100 something, maybe like $106.
Oh, okay, so $100 is $100, and you can, if you do it in 2 weeks, you can do it twice in a month.
Yeah.
Now, IONQ is down today, so let me give you a trade, okay? Let me see if I can pull it up. There's Tesla. Tesla was up today, 11 points. Okay, IONQ is down 4 points today. So if you sold the call, are you sure you sold the call or you buy the call?
Let me see.
It should say -1.
Yeah,
But
it does say
+1.
-1. It says -1.
So if you sold it for 106, if you look at the price now, it might be like 50 cents or 40 cents. You can actually buy it back and close it, right? Let's say it's 40 cents. So you sold it at $1. It's $100. You buy it back for 40 cents, which is times 100 because it's 100 shares. So you pay $40, and you gain. If you sold it for $100, you buy it back for $40, you gain $60. Okay.
Okay.
In just a few days, according to the time you did it, and then you can do another. Since you have your shares back,
It doesn't expire on the
call
6th. It expires on the 6th.
Of what of December?
6. Yeah. Friday, Thursday, Friday, Thursday.
Let me pull it up. Can I pull it up? Let me pull it up.
Yes.
IONQ. December. I'm gonna go options, and you go all, and we even have to go out 2 weeks. December 6th. So December 6th. So that's in 3 days.
Yeah.
So the 36 strike is showing. It's showing only. Well, it's still showing $1.05 by $1.70. So actually, it's a little bit more than when you sold it.
Right.
Because the stock went up.
Right.
But that's okay. That's okay because you can just let it expire, and then you would have had pocketed, if what you're saying is correct, $106.
Yeah, 106, 104 to 106, around in that area. I think that's what I looked at right quick.
Now, so you don't have to do nothing actually, and wait till Friday.
Okay.
Until Monday, you'll have the shares free and clear. You can do another cover call.
Okay. I was too scared. I'm too scared.
Try to get a little more than $100, but if $100 is $100.
Right.
And the advantage is that if you write the cover call for above the strike price, you're getting the premium. Plus, you can also get the share growth as it goes up.
Okay.
So you're probably gonna have also some share growth on the stock itself.
So I think I bought it a little less. I bought it a little at. I thought I bought it at about 34. That's what I bought it at. When I bought the shares.
Okay, and it's about 33, 34 now. So
yeah.
Oh, no. Actually, what happened? It went down to 32 today, but then after hours it went up to 33.50. So it's going up in after hours. So it's around the same price you bought it at.
Right. So I don't know. I get scary when I think about it. So I said, let me do just one. Let me try it out, and then I'll move on to the next one.
If you want to do a one-on-one session with me, it's just $50.
Okay, we'll do.
Any more questions?
That's it. Thank you.
Thank you for coming out. I'll be back. I'm here every Monday, guys, and also a random day during the week. Come here, talk about trades, talk about different positions, talk about different stocks, talk about cover calls in this case. So every Monday night, I'm so sorry today. I had some technical difficulties, but I'll try. I fixed that, and I'll try that not that happen again. Thank you guys for who waited, and I might come on Friday. We'll see how it goes. Just a random day, I'll pop in, see what's what. See if you guys have some questions for me. Okay. Ms. Thoughts on RKLB? Oh, Rocket Labs. Rocket Labs. Let's pull it up. RKLB. Ms. Rocket Labs is 24.75. It was down 3 today. The 24.16. RKLB. It closed at 24.16, down 3.13. But then after hours, it was up 59 cents to 24.75. Let's see if I can get this here.
Updated. 1:42 and 10 seconds a.m. Eastern Time, December 3rd, 202401:42. Company profile. Share profile. Short interest. Short interest. Disclosures. Company profile. Share profile. Short interest.
It's not going to read the company profile. Let me read it for you. Rocket Labs USA, a space company, provides launch services and space systems solutions for the space and defense industries. Company provides launch services, spacecraft design services, spacecraft components, spacecraft manufacturing, and other spacecraft on-orbit management solutions. Okay, so that's what they do. So they're in an uptrend. What I think about Rocket Labs. Rocket Labs is very hot today. If you guys look at the 3-month chart, it was $6 3 months ago, and now it's 24. Now it was down today, but still in an uptrend. So I think it's a buying opportunity, and I think it's going to keep going up. It's probably good for at least $30 or $40, and I say that with risk. They say risk capital only. Don't put your rent money in here. Don't put the kids' college fund. Because these high volatile stocks, IONQ, which is, we just talked about that, a pure play quantum computing company, they're also very hot. Rocket Labs, also very hot, but high risk. So you can buy some shares, or do some cover calls, or do some puts, but be prepared for a big pullback. And what I do, I buy in the pullback. I use that as an opportunity. So patience, they say with patience, you can rule the world. So wait for these stocks. I just showed you SMCI. It was up $9 today. The SMCI investors are very happy. They deserve that. They had to wait. They had to wait for that. Patience, for the stock to come up like that. And if the stock's up, ideally you write the cover call because you get paid more when the stock's up. So anybody writing cover calls, ideally you wait for a swing up in the share price. I wouldn't do a cover call when the shares are down. I wait till it swings up because you get a better return on those premiums. And then when the stock is down, you either buy the shares lower or what? Or sell a put. Because when you sell a put, when the stock's down, the puts are paying more. So you take advantage, you get paid more from the put. So if you just have one stock, whether it's let's just say Tesla, because Tesla goes up and down. Okay, I'm gonna pull Tesla up right now. TSLA. If you pull the 3-month on Tesla, it was actually 210 3 months ago, and Elon got involved with Trump, and Trump won. Now we're at like 340, 350, and today it's 352 or 357 up 11. the point I'm bringing about Tesla is if you wait for a pullback, you can buy the shares or sell a put for more. And if you wait till the stock swings up and you have the stock, you can sell the shares at a profit. Or you can write a cover call and you get paid more for the call when it's up. Write that down. When the stock swings up, write a call. When the stock dips, sell a put. When the stock swings up, you can sell the shares. When the stock dips, you can buy the shares. Buy low, sell high. I make it sound easy. It's not easy because we don't know where the stock's going. We don't know where the stock's going, but when you write a cover call or a put, you take that risk out of it because you're getting paid regardless where the stock goes up or down. It's like money on top.